If you have ever wondered how investors sell one property and buy another without immediately paying capital gains taxes, let me walk you through a real-world example using our own experience. So recently, we sold our townhome in Marietta, Georgia, and instead of simply cashing out and taking the tax hit, we chose to use a 1031 exchange strategy to roll those proceeds into another investment property. A 1031 exchange, named after Section 1031 of the IRS tax code, allows investors to defer capital gains taxes when they sell an investment property and purchase another qualifying investment property. The key is that you can't touch the money directly. The funds have to be held by a qualified intermediary during the process. So once our Marietta townhome sold, the proceeds were transferred into the exchange account through the intermediary. From there, the clock started ticking. Under IRS guidelines, you have 45 days to identify potential replacement properties and 180 days to close on one of them. We already had a target market in mind. We had been watching the Gulf Shores area closely and really liked a particular cottage community near the beach. So we traveled down, toured several homes, evaluated rental potential, and looked at location, amenities, and long-term appreciation opportunities. And ultimately, we found a property that checked all of the boxes for us. We identified that home as part of our 1031 exchange and moved forward with the purchase. To help maximize leverage and preserve some cash reserves, we also utilized a DSCR loan. For those unfamiliar, a DSCR loan, or debt service coverage ratio loan, is designed specifically for investment properties and qualifies based more on the property's income potential rather than your personal income. That can be a huge advantage for real estate investors. By combining the 1031 exchange with the DSCR financing, we were able to transition equity from one investment property into another while continuing to grow our portfolio strategically. And today, we're the proud owners of a beautiful 3-bedroom, 2-bath beach cottage in the Gulf Shores area that we believe has strong long-term investment potential along with excellent vacation rental appeal. Now, a couple of important things to remember. A 1031 exchange only applies to investment or business properties, not primary residences. Timing is critical, and the process has to be structured properly from the beginning. You'll want a great real estate agent, a qualified intermediary, and a lender familiar with investment financing to help guide you through it. If you've been thinking about selling one investment property and repositioning into another market, another asset class, or even something like a beach rental, 1031 exchange can be an incredibly powerful wealth building tool when used correctly. I'm Paul Washington with the Washington team, and if you'd like to talk through strategies for investment properties, vacation rentals, or whether a 1031 exchange might make sense for you, I'd love to help you guide through the process. Have a great day.